Let's talk about something that sounds, well, almost impossible. Making health insurance simple, transparent, and maybe even human. We're going to dive into Oscar Health and tackle the big question. Can a tech company really fix your insurance? You know the feeling, right? You're staring at a medical bill, totally baffled. The American healthcare system is famously complex. It's just historically been jammed with middlemen, creating this huge gap between what you pay and the value you actually get. It's that exact frustration that opened the door for a new kind of company. So, into this mess steps Oscar Health. Founded back in 2012, they had a totally different idea. They weren't some old-school insurer just tacking on an app. No, Oscar was built from the ground up as a technology company that just happens to sell health insurance. The entire idea is that tech can unravel this chaos and put you, the member, back in control of your own health.
And this right here, this is their North Star. This mission is what drives literally everything they do. They talk about wanting to be like a doctor in the family, a trusted guide to help you figure the whole system out. It's not just about paying bills. It's about making healthcare proactive and easier for all of us to understand.
So how do they actually pull this off? Well, their secret sauce is what they call their full-stack tech platform. The best way to think about it is like having a really smart, personalized health assistant that lives right in your pocket. Because they built the whole thing themselves, from the app you use to the complicated backend that processes claims, they can see and use data in a way that traditional insurance just can't. This lets them point you to high-quality doctors and help you find care that's actually affordable.
A great mission and some cool tech is one thing, but how does this work as a business? How do they operate and, make money? Let's take a look at how they put that platform to work.
Okay, so Oscar's main gig is selling health plans. They're big on individual and family plans, the kind you find on the ACA marketplace. They also cover small businesses through a partnership with Cigna. But you'll notice something missing: Medicare Advantage. This wasn't a failure so much as a really strategic move. They decided to cut a business line that wasn't working for them to focus on the big goal, becoming profitable.
And this is where their model gets really interesting. Oscar doesn't just use its tech for its own members. With a product called Plus Oscar, they're basically packaging up that tech platform and selling it as a service to other folks in healthcare, like hospitals or even other insurers. It's a classic tech company move, turning your best internal tool into a whole new way to make money.
So the business model is pretty clear. But for a company trying to disrupt an industry worth trillions, financial sustainability is everything. Is this tech-first approach actually paying the bills? Let's run a quick financial checkup.
First up, let's talk scale. At the end of 2023, Oscar had about 1 million members. Now you might look at that and notice it's actually a dip from the year before. But hold on, that wasn't an accident. It was a deliberate choice to focus only on markets where they could win and to prioritize financial health over just, growth at any cost.
And you can see that strategy paying off big time in the numbers. Even with slightly fewer members, total revenue jumped from less than $4 billion to almost $6 billion in 1 year. But here's the kicker. Their net loss was more than cut in half. It went from over $600 million down to $270 million. The story here is crystal clear. They grew revenue while getting way healthier on the bottom line.
To really get how they're doing this, we got to understand a key industry term, the medical loss ratio, or MLR. All this is the percentage of your premium money that an insurer spends on actual medical care. For the insurance company, a lower number is better. It means they're managing costs well. And here's the proof in the pudding. Oscar's MLR dropped from 85.3% down to 81.6%. That's a really significant improvement. It shows their tech-first approach to guiding members and managing care, it's actually working. They are controlling medical costs, which is absolutely critical on the path to being profitable. All right, last big financial metric, I promise. It's called adjusted EBITDA. I know, it's a mouthful, but what it does is strip out a bunch of accounting stuff to give us a really clear picture of the company's core operational health. The question it answers is the fundamental business of selling insurance and tech actually making money?
And what we see here is just a massive milestone, a huge turnaround. In 2022, they were losing a lot of money on this basis. But in 2023, they totally flipped the script to a positive $147 million. This is a powerful signal that, for the first time, their core business engine isn't just running, It's running profitably.
So the financial picture has improved dramatically, and Oscar is on much, much stronger ground. But what does the future hold? Let's look at the road ahead, because there are both huge opportunities and some very real risks.
On the one hand, Oscar has some serious tailwinds pushing them forward. Selling that Plus Oscar platform is a huge growth driver. Plus, government policies like extended ACA subsidies are helping, and they could gain new members from shifts in Medicaid. But, on the other hand, the headwinds are fierce. Competition from the industry giants is intense. Regulations are a complex maze, and just like any insurer, they're always at risk of miscalculating future medical costs.
And to really put that competition into perspective, just look at this. Oscar is still a tiny, tiny player in a field of absolute behemoths. With just a fraction of a % of the market, they are the very definition of a disruptor, a David taking on multiple Goliaths. Their entire game plan has to be about being smarter, faster, and more efficient.
Despite those challenges, the company is very public about its optimism. This quote from their 2023 annual report lays out a super clear and ambitious goal: to be profitable for the whole company on that adjusted EBITDA basis in 2024. That's the next major milestone everyone is watching.
Which brings us right back to our big question. Oscar Health has built this unique, tech-driven model. They've shown really impressive progress turning their finances around, and they have a clear strategy. But the ultimate challenge is still there. Can this small, innovative company really, truly disrupt one of the world's biggest and most complicated industries for good? That's the billion-dollar question we'll all be watching.